to do it in an entity which do not have history. There is no other reason to do that.
You talk about history, sir. That is exactly what
we are trying to gauge. Like when you talk about starting in a company with no past history, what kind of history are you alluding to that is so concerning to a Japanese partner that they can't continue under the similar structure?
No, nothing like that.
Just one second. No, Anurag, Anurag, right?
Agni.
Agni, sir. Agni, no, it's not a question of preference. The point is here that BPSL existed as a subsidiary of JSW Steel separately, right? 83% owned by JSW Steel, 17% owned by the promoter entity. This was a natural subsidiary which could be separated out from JSW Steel into a joint venture. That is why the choice. It also had land separately available in which you could expand immediately. So it's a question of discussion between both the partners to arrive at this particular expansion.
With the equity, what's the by March?
On JSW Steel side? So on approximately 80,000 crore net debt today, 37,000 crore reduction. I mean, if you recall, we were at 2.97 net debt to EBITDA last quarter. It has almost a 1.15 turn impact, depending on, of course, what the EBITDA is, because EBITDA is denominator. But it's over 1 turn impact is what we should expect to see after transaction gets concluded.
It will come down by 1.1%.
Entirely depending on the denominator, but it will be one.
About a third.
Yeah.
So you plan to make any value-add steel there, or you just want to?
The product mix is, the joint venture partners will discuss and finalize, but the intention is to get it to a model steel plant which will have higher technology, which will have value-added products, which we hope to bring in with JFE's collaboration.
Not into green steel or anything on that?
Green steel we are already doing separately in Salau. So as of now, we are not planning any separate exposure to that.
You're doing quite a bit of JV. With POSCO also you have one. So is it something that you are exploring to do instead of growing organically in the places that to bring those high-grade steel or those specialized steel in the country, which is not presently available, for which we had the QOCs also removed. So are you looking to make those steel in India through these JVs?
So just to take you a little back on the history. So we, over the last 2 decades, we brought in various technologies with JFE. One of them was on automotive steel, which we had high tensile, advanced high strength steel. Then we went into electrical steel, and then finally into the CRGO part of the electrical steel. So therefore, you have advantage in partnering with a global technology leader and a global steel player. POSCO also is one of the excellent companies world. JSW Steel is the natural partner because it's the largest, one of the most growing in the country, and therefore there are, I would say, interest by major players to partner with us. It makes sense for us as well because certain part of the technology therefore will be able to be leveraged. JSW Steel has operational efficiencies, has project execution capabilities, and we have developed our own bit on technology as well. So it's a win-win kind of thing for both of us. POSCO will be a joint venture JV from ground zero. That's a little different. And
the JV is not in the POSCO JV is not in place. We've just announced an MOU.
It is an MOU, and the joint venture will be done in the due course.
You mentioned that you're going to be looking at doubling the capacity. You said that in the past as well, that this asset has the the capacity to go ahead and become 10 million tons per. At what capex will this happen, and by when do we take a call in ramping up this asset?
So we would, both the partners would be putting in, requisite teams to study the possibilities of getting in new products and possibilities of technology to be used. And we expect to be able to start maybe in a year's time.
Okay, all right. And as of now, in JSW Steel, the holding JFE has 15% as it is. Is there a approval in place for them to go ahead and increase their capacity?
No.
Is it the ceiling?
There is no approval in place.
There's no approval in place. So at some point of time, will that be reverse merge?
No.
Not as of now.
No.
Does okay? So, do you have a clarity on the management structure for BPSL or JSW Kalinga? There is the entity holding it now. Is there a plan in place? And secondly, does JFE? I mean, they already have a board seat on JSW Steel. Do they get another one through this?
No. You wanna go?
Yeah, I think in terms of the governance structure, the way the JV is getting structured, it's a 50-50 joint control JV, which means both partners have equal control. Therefore, I think on the board of the companies as well, both partners will have equal, representation in terms of directors, etc. As regards the functions, right, in terms of various operational functions, etc., we are structuring them in a manner that wherever we believe JSW as a local partner has better strengths, those functions we will need. Wherever JFE as a partner has better strengths on technology, innovation, etc., those functions they will lead. And there's a rotation that happens between the CEO, chairman, etc., etc.
You had a capex commitment of around 1 lakh crores at the JSW Steel level. Will that remain or will that come down a little bit over the next few years?
It'll probably go up a little bit.
How much do you plan to increase it for the next 2-3 years?
So we already have given you a feel as to what is our capex spending as on 1st of October, right? September end results. Close to 70,000 crores, let's say, is the capex which is in the pipeline. In addition to that, we have already given you a pathway. This is for the 70,000 crores is for the capex which we have declared so far for 43 million tons.
43 million tons.
In India and whatever is there in Ohio. We have the opportunity to, as we said, to go to 50 million and beyond through assets in Vijayanagar. I'm leaving the BPSL right now because that was not a part of our 50. So Vijayanagar, in Salao for green steel. So 5 and 4, these two 9 million tons takes us beyond 50 from 43. We would be adding the Orissa Paradip plant, which we have been saying that we are going to be doing in a modular fashion. So we already have laid about 200 kilometers of the pipeline out of 300 kilometers, slurry pipeline. The pellet plants, 2 pellet plants of 8 million tons are already under construction. Infrastructure is getting into place. Our next step is to look at the first phase of steel expansion. This transaction will help us to achieve that goal faster. So we would announce in due course the timeline in which we would like to embark on the next phase of our projects.
So safe to say now JSW is looking at growing only organically because otherwise, you expect the largest player to be active even in the inorganic market. Maybe bad news for some of the sellers. Will you look to grow?
No, if there are any opportunities which may come up, Nigel, we'll certainly look at it. If it makes sense, why not? So this, as we said, because of this significant deleveraging and a much better balance sheet, you have the strength to do organic or inorganic. If there is a strong opportunity which comes in inorganic, why not?
Is there one?
You tell me. So as of now, we don't see.
One more thing, talking about strength, steel prices have been a little weak, right? I mean, it was done and dusted. Everyone thought that duty is coming in place. Steel Secretary told me last week it's coming soon. Now, the definition of soon can be very different for different people. What do you think? Is it coming? Have you heard anything? Is it coming at all? Is it delayed? Or
No, we believe the safeguard duty will come. You've seen the intent of the government. They have imposed anti-dumping duty on Vietnam a few weeks back. So we believe that the safeguard duty will come in place.
So, Mr. Acharya, is it fair to say that you are open for more inorganic growth given the right opportunity?
We always have been open for inorganic growth given the right opportunity.
Will it be in the downstream space or anything else?
Depends on the opportunity.
What will be the initial capacity there in Paradip?
So Paradip has a EC of 13 million tons already in place. The site has got the capability to go to 25 million tons. It is on a port, so therefore we're going to build the port as well. It will have a slurry pipeline. So it will be one of the most cost-effective steel plants I think, globally. So therefore, we feel it would make sense for us to fast track that project.
How much 5 million ton or it goes directly to?
We'll go phase wise, yeah, but 5, the first phase 5 and then the next 5.
Had the Supreme Court disruption
What happened with this deal would have been announced maybe earlier part of the year. Is that how we should understand this?
No, it's a speculation.
Speculation,
Because
yeah.
of the uncertainty with regard to the courts that we went ahead and did this deal.
No, I don't think it's fair to comment on that, but I think just enough to say that the Supreme Court's judgment is very clear, and we now have a good asset after 5 years of working, after turning it around into a profitable entity. We see a good runway ahead, so, and I think that's good for all of us.
Question, sir. Do you intend to keep the 50% with you, or do you plan to pair with it also over time?
No, we plan to keep the 50% with us.
Second, what's the update with POSCO? You were looking for a land in Odisha. Has that been finalized?
We have been exploring various options. So as of now, we are in discussion on this MOU and other terms.
But Odisha is the place that you
Most likely, but we are open to any of the other locations.
So just, yeah, sorry, any other question? No. So just, just to conclude from the joint venture, we believe, is a long-term strategic partnership between JSW and JFE. We believe it's a win-win for both. It helps us substantially strengthen our balance sheet, deleverage, get in a global player with technical expertise. So therefore, it will add value to all our shareholders.
And effectively grow faster, right? The basic thought process for doing this transaction is to be able to grow faster and secure your growth, right? In the process, you're getting a deleveraging impact on the balance sheet, which is very significant. You're getting in not just cash, but a partner for technology, which helps you grow BPSL in a technologically advanced manner, which helps you grow JSW Steel faster because now you have the headroom available. So I think that is fundamentally the thought process behind doing the transaction, not just getting in the cash for the growth, but along with the cash, getting in a certain quality of partner where BPSL runs faster. In JSW Steel, we have the ability to run faster.
So if everything is a win-win, why do you think there was a legal reaction on the stock?
We need to check that with the investors.
Yeah.
If I can just give a quick summary on how we see this deal other than the growth. It's a deal which will translate into 32,000 crore of non-debt capital coming into JSW Steel. It will increase our liquidity, it will improve our equity value. In addition to that, 5,000 crore of existing debt will deconsolidate. So this will create a deleverage effect of 37,250 crores, which is almost 1 turn impact on our last reported net debt to EBITDA. And while doing this, we have not given up BPSL. We still hold 50% of new BPSL. I think that's sum and substance of what we wanted to also convey here.
Have you thought about a new name for the joint venture?
We'll finalize the new name along with the partners soon. Thank you very much. Thank you for coming at a short notice. Thank you so much.
And viewers, that was the press conference of JSW Steel addressing the media on its latest deal with the Japanese company JFE. And this is a significant deal, especially for the steel landscape in India. Just to summarize what's happened so far, Japan's JFE Steel is investing a massive 15,750 crore to form a 50:50 joint venture with India's JSW Steel. Under this deal, Bhushan Power and Steel's fully integrated steel plant in Odisha, which has about 4.5 million tons per annum crude steel capacity, will be transferred to the new JV company for about 24,483 crore rupees. But to understand, the various perspectives about this deal, the economic impact, the stock impact, etc., and a lot more, I have with me Parag Thakkar, Head Fund Manager at Fort Capital, joining us on the phone line. Thank you so much, sir, for giving us your time. The company has
Yeah.
spoken very positively about this deal. They've told that it's going to contribute, productively to their cash generation as well. It aims to expand their steel capacity to a significant level. In fact, they're targeting 10 to 15 million ton per annum of capacity in the coming years via this deal. So how do you see the stock impact for JSW Steel because of this news going forward?
So I think it is a massive positive. JSW Steel has always done it very nicely. They always produce steel at lowest cost per ton, and capex is always lowest per ton. So I would say that this just adds fuel to the fire. This is a very positive thing, as management was highlighting. It will free up a lot of capital. Plus, it brings you, JFE was already an investor in JSW Steel also, and in Bhushan Power also. But with 50-50 JV and so much of capital coming in, I think this should be a very, very accretive, value accretive deal, at least in long term for sure, for JSW Steel.
Okay.
And if I'm not wrong, the sell-side analysts were valuing Bhushan Power at 30,000 crore, while this deal values it at about 40,000 crore. So from value accretion perspective also, in near term also, it is a value accretive deal.
Okay. Mr. Parag Thakkar, I'd also like to get in your comment on the deal structure, because there were questions put up on the deal structure as well. And the management said that that JFE wanted to do a structure with an entity that was clean, and they wanted to break away from the past. How do you think this is going to influence the company's perception in investors' mind going forward?
No, I think it's a positive only, because JFE is a very credible partner. They have a huge technology advantage, and with JSW Steel has always leveraged it since they got JFE in as a partner in JSW Steel itself many years ago. And this just tells you that the partnership is getting stronger and stronger. And so the value-added steel which JSW Steel will make out of JSW Steel itself and this Bhushan Power JV with JFE, I think the value-added steel will further increase, and that will further increase their EBITDA per ton. So I would say that netly it's a very positive deal.
I was actually coming to the EBITDA and the financial metrics, because it's important to understand that now that such a deal has taken place, and they plan to also conclude the finalities of this deal very soon, how do you think it's going to affect the profitability of the company going forward?
So one has to have a long-term view because see, right now the capacity of Bhushan Power is 4.5 million ton, and definitely this will significantly increase, right? And JSW Steel is already at 36 million ton, going to 43 million ton in next 2 years, and going to finally 50 million tons by 2030. I would say that it is volume increase plus your EBITDA per ton will also increase. And right now, of course, the steel market in India is slightly depressed. And I would say that, but going ahead, the things will improve, and EBITDA per ton also will significantly improve. Plus, I would say the value-added steel, which JFE has a big advantage on, and that will also add to JSW Steel's, both JSW Steel and Bhushan Power now, where JSW Steel will have 50% stake now. So I will say that for a long-term investor, it is a great thing. For short-term investor, let's see. But I would say that since the analysts were valuing Bhushan Power at a lower cost, at a lower enterprise value, and the deal has happened at a higher enterprise value, in short term also it is a positive.
Okay, in short term also it is a positive, because sir, the stock has been under pressure even today. It closed about 1.45% lower. If we can get that on our screens, you would see it. And the trajectory has not been very promising. So why do you think the market is not responding to the company's stock price at this given point in time? And do you think that could change going further?
So I would say, see, sometimes market looks at short-term things, and right now, as we speak, the steel market in India is not that great because of delayed monsoon, and the demand has not picked up yet. So the steel prices are depressed, and that is reflecting in the stock price. But I think after this deal, market will have a slightly medium to longer term view, and so I think the stock should gradually recover and finally go up in medium to long term.
Okay. Just to bring in a comment made by Jayant Acharya, he's the MD and CEO of JSW Steel. He said that, via this deal, he basically is turning a sick unit into a profitable one. And this JV enables JSW Steel to accelerate its growth beyond 51 million tons. Now, put this into context with the PE at which JSW Steel is currently trading at. Screener shows me 45.8. Now, number one, my question is, do you think it's already expensively valued? And second, if the deal is so positive for the company, and of course it is because the company looks forward to an increased room for profitability as well as capacity expansion significantly, where do you think the PE ratio could go?
No, I think in steel companies, you cannot look at PE multiples because they are always, and especially JSW Steel, which is continuously investing, right? So your interest cost and depreciation will always remain high. And your profits, conversion will happen after some time when they repay the debt or, when the capacity comes full stream. So it has to be valued on EV/EBITDA basis. Right now, I feel that this deal has happened at around 9.5 times on FY28 EV/EBITDA, and JSW itself is trading at around 8.5. So I feel that once the safeguard duty is in place and once the steel EBITDA per ton of JSW Steel goes structural and then further improves due to value-added steel, I think market will see it and will value it at higher EV/EBITDA.
Okay.
I think it has to be valued on EV/EBITDA basis.
So,
And from that perspective, I don't see JSW Steel as an overpriced stock.
Okay.
It's a fairly valued stock, and this deal will add a momentum in terms of future visibility of its EBITDA improvement.
Okay, so when you look at it from the EV/EBITDA angle, it does look fairly valued according to you. But what does this news means for shareholders of JSW Steel?
I think they should hold on. They should hold on. And in any cyclical sector, when the sector is going through a downturn kind of thing, you cannot look at earnings from that perspective because that time the earnings are depressed. So I would like to say that once the earnings normalize, you will see that the stock will give good returns. So I think it's a hold from my perspective.
Okay. So when JSW had initially acquired BPSL, it was a painful company not doing really well. But now, via this deal, JSW is going to deleverage its balance sheet by more than 37,000 crore rupees.
Absolutely.
How do you see this as an earnings booster for JSW Steel?
Absolutely. It's a huge... so basically, see, when you expand capacity, for example, when JSW goes from 36 million ton to say 50 million ton, which it had planned organically, I'm saying, the net debt number, which was say around 80,000 crores, many investors would have thought that this net debt number will also go up. I think with this deal and this cash thing, the net debt number will not go up and capacity will go up, which means that EV/EBITDA multiple will look more attractive.
Okay. So it was also brought to life in the press conference that promoter holding in JSW Steel would go up by about 1.42% via this deal. Now, is that a notable positive for promoters of this company?
Absolutely. Yeah, absolutely.
And how
absolutely.
really does it become profitable and why is it good news?
So that part of the thing I have not studied because I have not got chance to look at the exact deal. But I would say that valuing Bhushan Power at 42,000 crore for this deal and cash coming in JSW Steel's balance sheet to reduce debt or you can say to free up more capital for further expansion without taking debt is a significant positive in my view.
Yeah, definitely. They also mentioned that they will transfer about 5,000 crore of debt to the JV. But thank you so much, sir, for helping us understand the first layers of this deal right after the press conference happened. We appreciate your time.
Thanks. Yeah.
And that, viewers, is an extremely important and significant deal to take into account, especially in the Indian steel space that hasn't been doing that well. And it is important to now note where the journey for JSW goes ahead, in which direction and to what altitude. But moving on, let's check how the benchmark indices, the Indian markets, performed today. They apparently closed in the red for the fourth straight session, if you see on your screen, because Nifty slipped below the 26,000 mark, ending 0.18% lower, while the Sensex closed at 85,106, down about 31.46 points. Sectorally speaking, the market saw a mixed bag because auto, FMCG, PSU banks and metal ended about 1 to 3% lower, while IT, media and pharma closed in the green with modest gains of about 0.5%. So my colleague Anushi now joins us with a detailed market roundup of the day.
Nifty slips below the 26,000 mark is what we are looking at. Nifty has now fallen for a fourth consecutive session. Today's losses mainly led by Max Healthcare as well as Bharat Electronics. Now today benchmarks, while they were in red, they still managed to outperform where the broader markets were concerned. Do note that broader market indices were under pressure. Indian Bank and Hutco saw the most fall in Nifty Midcap 150, while Spark and Easy Trip Planners are the top losers in Nifty Small Cap 250 is what we are looking at. In terms of sectoral indices as well, it was a mixed note. Nifty PSU Bank fell over 3% for the day, emerging as the top losing sector. Indian Bank and PNB fell the most in this particular pack that we are seeing, while Nifty, IT and financials gained in the train. Do note that oil and gas and realty have continued to remain under pressure, and it's the fifth straight session of loss that we are looking at, while Nifty Auto, PSU Bank, metals for the second consecutive session is what we are seeing. Nifty Financials, however, snapped their 3-day of losing streak, while Nifty Bank snapped its 2-day of gaining streak. So this is the overall perspective.
For rupee viewers, the rupee closed lower against the US dollar for the third consecutive session, ending 31 paise down at 90.19. In intraday trade, the currency slumped 42 paise to hit a record low of 90.30 against the dollar. This compares with the previous close of 89.88. So acute weakness observed